Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically what we are doing, we are covering the banking awareness part of it, right? Okay. And in the previous lecture, we had completed the IDBA bank, okay, which means that Industrial Development Bank of India. Okay, so basically in this lecture we are going to start with another important you can say the financial institution. Okay, so what are the contents we are going to discuss? First we will see the overview, thereafter we will see the objectives, thereafter we will see the regulation part, then we will see the functions, then the promotion programs, the international presence, the infrastructure finance, and thereafter the summary. Okay, so these are the topics we are going to discuss in this particular lecture. All right, or not in this particular lecture, basically in this particular banking institution. Okay, so let's begin with the first, which is the overview. Okay, so overview about which particular banking institution we are going to study. So we are going to study about the Export-Import Bank of India, in short known as the EXIM. Okay, so basically the EXIM, X means export, Im means import. Okay, so basically it is been you can say it has been indulged in the both export as well as the imports, so that's why its name is the EXIM Bank. Okay, it is a specialized financial institution established by the government of India to promote and support India's foreign trade. Because when we talk about the export import, basically we are talking about the foreign trade. All right. Thereafter, it was set up. Okay, so before this, let me tell you one thing. Okay, which is very, very important. We have seen a word foreign trade. Right? So what do you mean by this foreign trade? What is the meaning of this foreign trade? And oftenly you have seen this in the news. Okay, you have seen this in some magazine or on social media that the foreign trade, this and that. So why the foreign trade is important? And what is a foreign trade? Okay, so basically if we talk about A, B, C, D, E. Okay, so if we talk about these all are the countries. Okay, it is not possible that any country having all the resources required. This is not possible. Okay, it means that the A will having something, the B will having something, the C will having something, D will having something, and the E will having something. All right, so it means that they all having something, they all lacking something. Okay, so you can also see it here, like they having something and thereafter they lacking something. Okay, so for the lacking part, like the things they are lacking with, they will acquire it from the other nations. Okay, by offering the things they are having. Okay, it means that A will acquire something from D, and in return the D will receive something from the A. Okay, similar things will be happen between them. Okay, so this is, you can say that this is the scenario, and this is what we call foreign trade. It means that when the nations are being engaged in the trading activities, in the buying and selling, this is called the foreign trade. And it is important because it generates the employment, it generates the forex reserves, it generates the economic growth. Okay, now thereafter what we have the two main terms here. The first term stands for the export, the second term means the import. So what do you mean by this? Okay, export means going outside All right. Inflow of foreign currency. Okay. And thereafter outflow of, you can say going outside, inflow of foreign currency, and positive in nature. Okay, because it's a income. Okay, import means coming inside, outflow of domestic currency or foreign currency, you can say. Okay, and this is the expenditure, so oftenly regarded as a negative part. Okay, so this is the difference between the export import. In the export part, basically you are selling. Okay, it means that you are sending the product out of your country. Okay, and this will receive the money from them. So this is the inflow of foreign currency. This is the positive in nature because it's an income. You are earning something by selling something. But when we talk about the import, it means that coming inside. Now you are buying from some country. You are not selling them, you are buying from them. Okay, and this will lead to the outflow of the foreign currency. It means that you have to spend your forex reserve, and this is the expenditure. That's why it's a negative part, because right now you are doing the expenditure, you are not earning something. Okay, so now I hope that the fundamentals of the export and import has been cleared in your mind, so that you can understand the importance of the Exim Bank and how does the Exim Bank work for the economy. Okay, so first, after seeing the full form, after seeing some aspects, now we have the establishment. It was set up on 1st January 1982 under the Export Import Bank of India Act 1981. All right. So here you can say act. Act means this is the statutory body. Got it? So it was set up on 1st January 1982 under the Export Import Bank of India Act 1981. All right, and because it has been established by the act, so it is a statutory body. All right, thereafter, Exim Bank plays a crucial role in facilitating India's international trade and investment by offering a range of financial products and services to exporters, importers, and the foreign investors. All right, so international trade and the foreign trades are the same. Okay, and they not only facilitating the India's international trade, it means that not only facilitating the export and import facilities, but they are also attracting the investments. All right, and other financial products are being offered by them and services also to the exporters, to the importers and the foreign investors, so that the multidimensional growth of the economy could be ensured. Okay, now if we go forward, we have the historical context and the purpose. Historical context and the purpose establishing behind the IDBI. In the early 1980s, India was actively seeking to expand its international trade and to integrate more fully with the global economy. Okay, there is one thing I would like to tell you. After the 1947, okay, when we became independent, okay, so during this time, basically, we had acquired a protective approach. Okay, it means that we are trying to protect our people. Okay, or not our people, you can say local merchants. All right, so that we were not allowing the foreign players to come inside the India market. Okay, so that the local merchants must get the access to the Indian consumer base. All right, but this would eliminate the competition from the market. Okay, and because of this, what happened? That not only the customers were getting the less facilities, because as I've told you, there will be a competition in the market, there will be facilities. But if there is a less competition in the market, less amount of the facilities will be there. Okay, so not only the consumers were suffering, but also the economy was suffering. Why? Because the local merchants and the domestic industries were not performing as they were supposed to. Industries were not performing as they were supposed to. Okay, and because of this, finally, after the 1980s, when the global economy was growing very fast, all right, there was a Cold War just finished and all the things were happening, all right, India also shifted protective approach to the participatory approach. All right, protective approach towards a participatory approach. Okay, and that leads to the opening up of the financial borders for the foreign players and the outsiders, so that India could be integrated more fully with the global economy. All right, you can say that we have adopted a protective approach. Okay, so that our market players could have the access to the Indian consumer base. But what happened? I have told you that many you can say many problems were facing by the Indians on that time. All right, lack of competition leads towards the elimination of the customer centric services. All right, and even the domestic industries were not performing as they were expected to. Okay, and during the 1980s, finally the Indian policymakers realized the need of alignment and the integration with the global economy. That's why they were started removing the financial borders. Okay, and this lead to the replacement of proactive approach with the participatory approach. Okay, the government of India recognized the need for a specialized financial institution to serve as a catalyst for promoting the foreign trade. Okay, like suppose foreign trade involving both export as well as the import. Okay, there is no such criteria that only the export will be implemented, not the import will be implemented. Okay, there is no such criteria existed in the market. Got it? So what happening? The Indian government has to deal with both the things. Okay, so that's why they started searching as a proper organization which could facilitate the export and import, not by financially, okay, but also as an advisory, and you can say also providing the investment and growth opportunities. Okay, so that's why they started to find out an organization which will serve as a catalyst for promoting foreign trade. Okay, here the catalyst means the facilitator. Okay, because the catalyst, what do you mean by the catalyst? The catalyst is, you can say, some component, all right, which is being used for the reactions to make the reaction faster at the rapid rate. Okay, so these are the facilitators in the reaction. All right, similar things could be happen with the economy. All right, we have to make a reaction of export and import. That's why we are looking for the catalyst, or you can say the facilitator. Okay, now thereafter, until then, the Indian exporters and the importers largely relied on the commercial banks that may not have had the necessary expertise or the inclination to finance export import operations, especially is less traditional markets. Okay, so you can say, like if we talk about the commercial bank, okay, so remember one thing, that these are the you can say regular bank. Okay, these are not the specialized bank. Okay, These are the regular bank, not the specialized bank. Okay, so that's why they have to deal with the wide range of consumers. Okay, so because of this, they were not able to look after the demand of the exporters and importers. And even the export and import is full of risk. Okay, remember this one. It is full of risk. It is not a cakewalk. Okay, because it is work on a credit line, not on a regular transaction. Okay, suppose you are this country A, this country B. You are exporting something to B. Okay, you will receive payment once the product has been delivered. Okay, so this is the credit line. Similarly, if you are importing something from A, maybe you have to pay the payment advance and then you will receive the goods and services, or goods basically. Okay, so this is when you required a facilitator in between, okay, that will finance your trading activities. So now you can see there is a risk associated with them. Okay, and the commercial bank is a regular bank. That's what we have also seen. So that was the main key reasons why the importers and exporters were not satisfying with the banking services. Okay, and then their necessary expertise of the commercial banks. Why? Because these are the regular banks. Okay, they are mainly deal with the deposits. Okay, mainly deal with the loan grants. All right, and nowadays they are also engaged in the, you can say, investment purposes. All right, but when we talk about the 1980s, when the Exim Bank was established, they were mainly dealing in the deposits and the loans part. They do not having a sufficient expertise for the foreign trade. Got it? So that was also the main reason. Okay, or their inclination to finance export-import operations were also less. Why? As I have told you, because there is a risk associated with the export and import. Okay, and the commercial banks, which were in the regular nature, or you can say were not a specialized bank, they will find themselves in a difficult position to have the exporters and importers. Okay, and this increases the demand for facilitator or catalyst of exports and imports. Okay, thereafter what we have the legal framework. Legal basis for the establishment of Exim Bank was the Export-Import Bank of India Act 1981, which was passed by the Parliament of India. Alright, you can say the legal framework. Legal framework here signifies the rules, regulations and provisions. Okay, legal framework here signifies the rules, regulations and provisions associated with the Exim Bank. Okay, so as we have already discussed in the starting of this lecture, that the Exim Bank derived its power from the Exim Bank Act, or you can say Export-Import Bank of India 1981. Okay, so this gives him the statutory force. And obviously it is at the national level, so the Parliament of India will be passed it off. The act provided the bank with a mandate to provide financial assistance to exporters and importers and function as the principal financial institution for coordinating the working of institutions engaged in the financing export and import of goods and services. Okay, so you can say this act having several features, like first they provide the mandate, okay, to the Exim Bank, so that the Exim Bank could provide the financial assistance to the exporters and importers. Okay. Second, it could function as the principal financial institution for coordinating the working of institutions engaged in the financing export and import of goods and services. All right. So it is the principal financial institution, or also you could call it as an apex institution in financing the export and import. Okay. And also coordinate the working of institutions engaged in the financing export and imports of goods and services, or you can say like the developmental financial institutions. Okay. Which are specifically, or you can say generally engaged in the finance of exports and imports in India. Okay. Thereafter, this was meant to ensure that the Indian traders had the necessary support and the financial instruments to compete on an international stage. Okay, because during the 1980s, when the India was trying to shift its proactive, or you can say the protective approach with the participatory approach, all right, proactive approach with the participatory approach, basically what they were doing, they were attracting the foreign players also. Okay, because there is a very famous principle of WTO known as the reciprocal principle. Okay, it means, suppose if this is the two countries, country A, okay, let me make it big, country A, country B. Okay, so if the A's merchants exporting the goods to B, all right, or you can say having the trade with B, similar thing will be happen here. Okay, they could not say that we will do the trade with your country, but you could not do the trade with our country. Okay, so similar thing was happening with the India. Like if the Indians will go to the another country, they will have to you can say accept the other country's player in their market too. All right, so that's why eventually the Indian players have to compete with the international stage. Okay, so it is very, very necessary to ensure that the necessary support and the financial instruments have been provided to the Indian players so that they could compete in the market. Okay. Thereafter, the initial capitalization, you can say the bank was started with an initial capitalization of 50 million Indian rupees, not US dollars, which was a significant sum on that time, 1980s, which was entirely provided by the government of India. It means that it was a government-owned entity. Okay. Thereafter, the initial funding was crucial as it gave the bank the financial base to start its operation and to signal the government's commitment to supporting international trade. Okay. The capital was expected to be leveraged to raise additional funds from the market to support its operations. Okay. So students, basically in this lecture, we have finished the overview of the Exim Bank. In the next lecture, we will continue with the topic and we will see some other facts and figures. Till then, just revise the proper facts and figures we have discussed in this lecture and be ready for the other lecture. With this note, let's end this lecture and say thank you.